Yo, what's good, YouTube? It's your boy 773 Josh, and we are back with another video.
I used to be broke as a joke, now I'm having whatever I like. I still been fighting my demons, it's been one hell of a fight. I'm tired as hell, but I swear that I never get tired of trying. I'm cool as a wind, but I still can't let that nigga cross my line. Fuck what you heard, I don't care who you are. Came from the dirt, now I shine like a star. Ask how I'm doing, I'll tell you I'm fine. Look in my eyes, you can tell that I'm lying. Never thought that I would make it this far. I sing my little song as I play a guitar. Was writing this song and I ran out of time.
And in today's video, I'm going to be giving you guys a breakdown on how to start making money trading. I've been getting a lot of engagement, views, and people reaching out to me from the previous trading content that I've been posting. So if you haven't seen it, definitely make sure you watch it. In the description box below, I'll not only have my contact information for any comments, questions, concerns, but also any other recommended videos that you guys should check out. But before we go ahead and get started with this video, I want you guys to hit the like button, hit the subscribe button so that you guys can continue to get more value. But what I'm going to do is I want to go ahead and give you guys some basics, break down some simple information that could actually give you like a little jump start to actually starting to get into trading, start making money trading, all of that good stuff. So let's go ahead and get into the video. I'm not even going to do this from my camera, but I'm going to actually hop on my computer, share my screen, walk you guys through some steps and give you guys some basic information. So let's go ahead and get into it. If you are somebody that's brand new for trading, this is going to be a good video for you. If you're somebody with a little bit more experience, you know, this might be something that you still could take some value away from, but within my content I'm going to continue to give you guys more gems, more value to help you really start to not only just make money trading but have incomes flowing in multiple different ways. So let's go ahead and get into the video. All right, what's good, you guys? So first and foremost, before we go ahead and dive deep into like steps and me breaking down simple things for you guys, I do have like a little presentation, and this is actually like one of the trainings that I give to my community. And so I want to go over a couple of simple slides just because I don't know how experienced you are, how much you actually know. So first and foremost, let's talk about what is Forex trading. So Forex trading, or foreign exchange trading, involves buying and selling currencies to profit from changes in their value. It is the largest, most liquid market in the world, with trading volume that exceeds 6 trillion. So it's like $7.7 trillion a day that's traded within this market. And it's simply because this market is built upon countries' currencies. So each and every single country within the world has its own currency. The biggest difference between the Forex market and the stock market is really based off of US companies. And so when you're just trading in the stock market, you're only literally able to make money within the specific times that the market is open, which I believe is like 8 to 5 maybe. And after that, then the market is closed. You actually can't make money trading. But the Forex market is open from sometime in the afternoon Sunday, all day Monday, all day Tuesday, all day Wednesday, all day Thursday, and then majority of the day on Friday. I think it closes at like 4 p.m. Friday. And so Saturday is like the only complete day that the Forex market isn't open. So all throughout this time, you have transactions between people traveling from to different countries. You got the banks moving money. You got major corporations, hedge funds. And so the purpose is where, you know, we come into play. Traders aim to actually look at the market and predict the future direction of the currency prices to be able to make a profit. And so businesses, governments also engage in Forex hedge against currency fluctuations and conduct international trade as well. So the next thing I want to talk about very briefly is how it actually works. So currencies are traded in pairs, right? You have EUR USD, which is the European dollar and the US dollar. When you trade Forex, you're simultaneously buying one currency and selling another currency. That first currency, if it's stronger than the second currency, is going to force the market up. If the second currency is stronger than the first currency, it's going to force the market down. So your goal is to actually look at the market and look at certain factors to figure out which direction the market is going to go so that you can put yourself in position to profit off of the move before it actually happens. So I'm not going to go deep into this. I can actually drop another YouTube video that goes deeper into the rest of the information that's available within this training. I have a lot of training and a lot of value away that I could be giving away to you guys. But just hit the like button. Let me know in the comments below if you would like to see that full training on YouTube, and I could go ahead and make that video for you guys. But what I do want to go ahead and show you is to start making money, whether it's you practicing in the market or you actually making real money in the market, you first need to set up a broker account. And a broker is something that actually connects you to the market to where you don't have to travel and go to the different currency exchanges and exchange the money. The broker is going to connect you directly to the market and also give you the ability to leverage, meaning you're putting in less money and able to get a larger return from it of your investment. So when it comes down to a broker, this is actually the broker that I use. If you need help setting up your broker account, I have a video down below in the description. It might pop up within our eye to where it'll show you how to actually set up your account. But you have the ability to choose a live account. If you're choosing a live account, you should go ahead and get started with the ECN. And then for a demo account, the ECN demo account, minimum deposit is $10 for both accounts. Your demo account is pretty much just a practice account. And so I want to go ahead and open this up and show you guys how this will actually work and how it's actually set up. So this is actually one of my trading accounts, and in this broker, if you're using the website version, it looks like this, and it also pretty much looks very similar if you're using it from the phone. On the left hand side, you have specific market currencies. These are all of the major pairs. You have the ability to add additional pairs to this. You have the ability to create a favorites list, and with your favorites list is really whatever currencies that you actually add to it, you know. So we're just going to go ahead and go to the market list. So right here is your chart. So when you're actually looking at the chart, you can actually type in whatever currency pair you want to look at, whether it's a Forex pair or anything else. Like I'm looking up gold right now, XAU USD. So right now we're looking at the current market price of gold. Your blue candles are your up movements in the market. The orange candles are your down movements in the market. And you also could change your settings to go from light mode to dark mode, or even have a blue screen. So right now, also next to that, you have your time frames right here. So you have the ability to look at the chart on the minutes time frame. You have the ability to, M stands for minutes, H stands for hours, D stands for days, and then you also have the ability to change your chart from, you know, based off of ticks and stuff like that as well. But what I'm going to do within this video, I'm going to show you guys a simple strategy to actually identify, a good trade, right? Now, this isn't going to be super in depth or, the strategy that I personally use on a regular basis, but I want to give you guys some simple value for someone who is a beginner and is kind of just looking for a good starting point. So what I'm going to go ahead and do is I'm going to actually open up TradingView. And so let's go ahead and look at Forex pairs. We can go ahead and just look at, I like to trade GBP JPY. So we go ahead and look at this chart right here. Now, again, like I mentioned, I want to teach you guys a couple simple understandings that I personally believe is very important before you can actually start to expect to make a lot of good money in the market. You must understand your time frames, okay? So when I say understand your time frames, again, if you're on the seconds, you have this information right here. You have the minutes, you have the hours, you have the daily, you have the weekly, all of that good stuff. So what I want you to think of when you look at the time frame is understand that whichever time frame you're on, right now we're on the daily, right? 1 day. What that means is that every single one of these candles is worth 1 day, no matter how big, no matter how small. Right here, this candle is October 29th, 2024. We go over, that's October 30th. We go over to the next candle. That's October 31st. So when you change the time frame, it actually updates and give you more or less candles based off of the larger view that you're looking in the market. So if you go down to a smaller time frame within October 30th, if you go to, let's just say, the hour, you're going to see 24 candles within that specific day, opposed to just that one candle within the day. And I like to give a good analogy for this, like, let's say reading a book. When you look at the overall view of the book, you could ask yourself, okay, is this a fiction or a nonfiction? And that will already tell you the type of story that this book is going to have. If it's a fiction, it's probably something that's fake, made up. If it's nonfiction, then it's something that's actually real. And so when you're looking at the higher time frames in the market, it's give you the overall viewpoint of what's actually happening within the market. That's something I got in my eye, right? So when we're looking at the daily, this is giving us an overall viewpoint, right? And so I want to talk to you guys about something called trends. Now, trends is something that I believe we're very much used to. What we really have to do, and what a lot of people do, they try to explain trading and make it seem like something so complicated so that you might buy their course or whatever the case may be. Now, there are resources out there that can make trading a lot simpler, and I'm going to talk to you guys about some of them as well. But what I like like to do when I teach and I work with people, and even in my community, we like to dumb things down to really make it make sense. Not as if you're stupid, but to help you understand that this is something that you already somewhat know and understand. So when we think about trends, right, things that were trending, snapbacks, right? iPhones became a trend. It was a point in time where if you had an Android, it was cool as long as you had a phone. Then iPhones and Apple became a trend. And then the AirPods became a trend. Oh, you got regular headphones, you ain't got these. And then, you know, big baggy jeans has got back in style and became a trend. And so what a trend is something that most people typically follow. The majority will follow. That's what creates a trend. If it's just one person doing it, it's not yet a trend. But if it's hundreds of people doing it, it's a trend. So when it comes down to you looking at the market, you must understand that I'm just a little piece of the pie, right? I don't create the trend of the market. But thousands of people, the big banks and the investors who are putting millions and billions of dollars into this market, they are what controls the direction of the market. And you, as a smaller scale investor, a small scale trader, you want to follow the trend of the people who are moving the market, the market movers. And these are the banks and the companies and the large corporations. Okay, so when it comes down to a trend, you have two types of trends. You have an uptrend, which means that the market is going in an upward direction, right? Let's just draw that right there. And then you have a downtrend, and this is the market moving in a downward direction, okay? So one thing I want you guys to understand is that when the market is moving in an uptrend, it means that the market is creating higher highs, okay? Higher highs and higher lows. So let's just go ahead and do this real quick. All right, we're going to write HH, and that stands for higher high. Okay, now let's actually edit this as well, and let's make it more visible for the average eye. Make it a little bigger. I don't know what happened to my other. It gave me a bigger one, but it's okay. So we got higher high right here. Now, not only does the market create new highs, meaning a higher point that it hasn't reached before, it started here. So this is the highest point that the market has reached when we're going from left to right. It's just like reading a book too. You don't look at the market starting over here if you're trying to figure out what's about to happen next. You start from left to right. So we started here. This is the low point of the market. This is the new high point of the market. And then right here, and then down here, we have a higher low, right? So we're going to put an HL. And what a higher low means is that this was the lowest point of the market in this uptrend. Then the market went up here and created a new high. Then it dropped down and it created a higher low, because this was the original low, but this low is higher. Think of it like a staircase. And then right here, we got a new high. This high is higher than this high. So a uptrend is when the market is creating higher highs and higher lows, right? And then you have something called a break of structure, right? And a break of structure is when the market is in an uptrend. It has a pattern of going higher and higher. And when it stops going higher and it breaks that previous low, it is now shifting direction within the market. And it also might fall into something that we like to call a zone of support. Okay, so this is how you identify trends, when the market is just taking steps higher and higher. And you identify when the market is trending down, when the market is going lower and lower. The easier way to identify an uptrend versus a downtrend and figure out the overall direction of the market is to figure out which movement is stronger. Is the up movement stronger here, or is let's block this off. So we're going to focus on after this blue line. So after this blue line, all right, is the downs bigger or the ups bigger? The downs are bigger, right? The market is dropping a lot further down than it's going back up. A lot further down than it's going up. A lot further down than it's going up. And then sometimes it'll go back up and it'll retest a specific zone in the market. So that is how you identify trends. Now, the next thing I want to talk to you guys about, let's go ahead and clear this off. And let's go to the 4 hour. Now I want to talk to you guys about something called support and resistance. Okay? Support and resistance. So before I dive into support and resistance, what I want you guys to know is that the market moves in three ways. Okay, and I'm gonna identify these three for you right now. The market only moves in three directions. You have uptrends, the market trending up, right? That's one. Let's move this out the way. Uptrends. Let's put that right here. I don't know why it's in white. But we have our uptrends. And we already talked about our downtrends. So let's go ahead and get that out the way. We have our downtrends when the market is actually going down. And then we have another one that I have not talked to you guys about that we're going to talk about right now. And that is called consolidation. Okay? And consolidation is when the market is moving side to side. Like it's not making a big move up, or it's not making a big consistent drop down. Do you guys see how when the market got up into this area, it was literally like trapped inside the box? Right? So this right here is consolidation, when the market is moving sideways. Okay? And I'm going to give you guys a real simple strategy to actually get a jump start to understanding how to make money trading. So we're going to draw out our box, and this box is solid consolidation. Okay? It's when the market is not moving, consolidates. It consolidates. It's not really moving higher. Consolidation. Consolidation. I don't know what was going on right there. All right. So we have our consolidation. This is left to right. Uptrend is up. Downtrend is down. Consolidation sideways. Okay. So in zones and moments of the market consolidating, the market creates something called support and resistance. Okay. And I want you guys to think about support. Let's zoom in more. Okay. So in areas and in moments where the chart looks like this, right? The market creates, I guess that's better. The market creates something called support and resistance. Support. I want you guys to think about what support is, what support looks like, right? When you're sitting in a chair, what is the chair doing? It's supporting you from doing what? Falling to the ground, right? It's supporting you. And when you think about the word resistance, what is resistance doing? It's preventing you. So this is supporting you from falling down. The floor supports you from falling through the floor, and the ceiling is resisting things from going beyond. Okay? So down here is our floor, or we could say our support. Support / floor. Okay? And let's make this bigger, and let's change the color so we don't confuse this breakdown with consolidation, even though it still goes together. But this is our support. Okay? And then up here, excuse my dog, we have our ceiling / resistance. Okay? And we're going to make that red. And so what happens when the market is going sideways, it retests and it hits. When I say retest, it comes back, tries again. It hits levels of support and resistance multiple times before it completely makes a move. So right here, the market went up, it passed this, it went back down and hit this area of support. The market went up, it hit this level of resistance, right? It went up higher a little bit, but it didn't completely go over and keep going up. Then it came all the way back down, hit this floor again. It didn't completely close below, break the floor, nothing. It kept bouncing back and forth like a game of ping pong. And then from here, the market broke, retested right back to the support, went down, came back up, went down again, and continued down. So when it comes down to trading, what you're simply looking for is reaction. Okay? You're not looking to just look at the market and say, oh, now is the time to buy. Now is the time to sell. And this is where I believe a lot of people get trading misconstrued, or they get confused because they think it's just a look at it right now and expect to know what happens. No, This is not a guessing game. It's a prediction game. And the only way you could predict the future is if you understand what happened in the past. And so if we're looking at the market right now, right, we were just in an uptrend, okay? And in order for the uptrend to stop, we need something to break the uptrend, okay? So what I mean is boom, right? The market is trending up. The market is trending up, right? Creating higher highs. And then right here, it was supposed to go higher. This was a low, but it broke this trend and it started to go down. It came back, but it retested this area right here, okay? So this is an area, right? This was a previous low. This is a previous high. It came up, went down, came all the way back down here, and it continued back up. So now we are still pretty much in this uptrend for the most part. Right here, we didn't officially break the structure of this until it broke this floor right here. Right here, we got the break. Now, this is a simple strategy. I'm on the 4-hour time frame. I'm not going to go too deep in detail because I don't want to confuse anybody. But once you get the identification or the sign that things are about to change, this is how you put yourself in position to make money trading, right? When you see the yellow light, you already know after this yellow light, it's going to be a red light. After the red light, you're just anticipating a green light to go. So in this uptrend, you're looking for the green light of the market breaking this support and turning it into a resistance, meaning it coming up here and rejecting and not going beyond. If we're looking to sell, we want to make money from the market going down. If we want to buy, we want to make money from the market going up. So we want certain things to happen before we buy or before we sell. I only buy in uptrends. I only sell in downtrends. So if we were previously just in an uptrend, we need the market to break this uptrend and start to trend down. Now, how do we know that's going to happen and when do we know to get in? I'm going to teach you guys something very, very simple. Every zone becomes a previous zone, right? And the market moves in patterns. So you see how it kept hitting here. It first reached this area right here. It went out. It somewhat came back right here. It went out. It came back right here. It went out. It came back over here. But now it broke. Then it retested back right here and it dropped again. And then it came back up here, which also can be considered a zone on another scale. Right here, we could have said that this was a support. And then up here, this could have been a small scale resistance, right? Support, resistance, support, resistance, support, resistance. So right here, the market came back into another zone of support, right? And it became the new resistance. It didn't really go too far past it. It came back up here and it started to trickle down right there. But let's just say right now, you looked at this right here and you said, okay, it came back into the zone. It broke the uptrend. This thing is about to go down and I'm about to sell. Right here, you could have sold this trade. You could have sold the market, right? A short is a sell. So we could have got in right here. And I always put my stop loss at the previous high. Okay. So this would have been a big stop loss because we're on a 4-hour time frame. But you could have entered this trade right here. And you would have took this all the way down to whatever zone you feel like would have been good. Even if it was the starting point of the uptrend that you started to watch. You could have said, okay, I'm going to look for this from the beginning. Right? And you can set multiple targets to where you can make money multiple times within this market. Okay? So let's just say, boom, this was the trade that you wanted to take. You entered right here. It went down. You made some profit. Right? And then it went all the way back. Right here would have been your stop loss, which is your safety net. You are always in control of how long you are in the trade, how long you when you want to get out. So like I said, the stop loss is at the previous high because this is an area that we probably know that the market won't go back to. And let's just say that we set our stop loss up here at the resistance, at this previous resistance, because we're like, okay, it's not going to go back up here. It shouldn't go back up here. And it went back into negative, which is okay. It didn't kick us out the trade because our stop loss was here. And then we made money continuing all the way down in this trade. Okay. So this was a 241 pip stop loss for a 562 pip take profit. which means if you would have put $1 in, you would have risked $241 to be able to make $562, which is a good trade because you have the ability to make more than what you risk. Okay, but you also have the ability to choose. You don't have to just risk $1. So what I want to show you guys real quick now, right? Let's go to the current market right now. And I'm just going to do something very quickly to just show you guys how to take a trade in a simple form. Okay, so let's just say on the 4-hour, we're in a downtrend. So I'm only looking for sales. Okay, now right now, the market has went down, came up, went down, came up, went down, came up. It retested this zone right here. All right, we got us a retest. It came back, a pullback, right? It came back and retested this area right here. Or we could even call it that area right there. And then it continued down. It's still going down. So from this point, I need to go down to a smaller time frame, and I need to do more digging to find my perfect time to get into this trade. So as we already know, when the market makes a big drop down, it's pretty much going to come back. Any big move, it comes back. Up, comes back. Up, comes back. All right? So same thing here. Down, came back up, down, came back up, went down further, came back up. So before I get into this trade, I want to see a pullback. I want it to come back to a specific area before I take the trade. And right here is a zone of interest. All right. So now, before I take this trade for a sale, I want it to come back into this area right here, and then I want it to drop. So I'm just going to mark up just a quick little trade idea, you guys. This is not the full in-depth strategy. This is just a quick basic training for somebody. And I'm going to set my stop loss at the previous high. All right, I want it up there, and then I'm going to set my target down here. Okay, so this is a 61 pip stop loss, a 200 pip take profit if it comes back to this area. And the best part about it is when it doesn't come back, it's perfectly fine because you're not losing any money, right? So I'm going to show you guys how to set up something called a pending order so you don't have to stare at the charts all day long. So this gray number right here, 192364, I'm going to go to my chart. First, I'm going to look up the currency that I'm looking at, GBP, JPY. GBP, JPY. We're going to go to that chart. As you guys can see right now, this is at 191570, 19158. It's going to be a little bit different depending on the broker that you're looking at. Okay, so what I'm going to do is I'm going to go ahead and take this trade. I'm going to click this button right here. And I know that I'm looking to sell because we were in a downtrend. I'm going to click the settings button. I'm going to give me a full example. I'm going to also set a pending order. So for market execution will put me in the trade right away. A limit is going to put me in on the pullback. So I wanted to come back here, enter me into the trade here, and then I wanted to make me money from it going down. So I'm waiting for a motion that looks like this. All right, and that's the example of a limit. We want to pull back, enter me, keep going. A stop would have been enter me down here and then keep going. So we're setting a limit right now. So what I need to do right here is put in the price of my entry, 192364. 192364. Now, if this is something that isn't making 100% sense right now, you guys, you just have to educate yourself. You know, I went through a video course. I really invested into myself to learn how to trade. And this is something that I'm just giving you guys a quick breakdown of. You know, you're not just going to get it in one YouTube video. I hate when people try to do like, oh, the best guide. No, it's about studying. It's about somebody that's able to explain it in the right way for you. And it's about you studying to understand. So now we're putting in our stop loss. This is our safety net. So that if this market continues to go up instead of going down, we won't have to keep losing money past this point right here. So we're going to type in 192979. 192979. And then we're going to scroll down and we're going to put in our target price. Our target is this green line down here. So we want it to be 190373. 190373. So now we're going to type in 190.373. And now with this trade, if I only put in 10 cent, this is 1.01, this isn't a penny, it's 10 cent. If I put in 10 cent, I'm risking $4 to be able to make $12. Right? Based off of my account balance, I could do a lot more than that. I risk about 3 to 5% in a day. So let's take the account balance 2032 and we're gonna figure out 5%. So we're gonna times 5%. That's $101 that I could risk in this one trade and still be within my risk to reward ratio. So right there, $100 to be able to make 324. We place it, and now I didn't mean to do that. Okay, so now let's move this. Once this market goes back to this yellow line, if it does, it'll enter us here, and once it enters us, if it hits this red line, we'll lose the $100. If it comes down to this green line, we'll make 324. And also, once the trade is in profit, you can close out early. So this thing is dropping, y'all. I'm not gonna lie. I'm just gonna take a quick sell for an example for you guys. So I just put in a quick sell for 10 cent. And we're gonna set the stop loss. Let me not do that yet. Let's go to a smaller time frame before I set this stop loss. Minutes, 5 minute, because I want to see the pullback. All right, stop loss is there. That's gonna risk $1.41 change, and then we're gonna put our target at the same target that I had originally set. So down here. So we're risking $1.41 to be able to make $7.57 change. So I just did this to show you guys what it looks like when you're in the trade. You get to see it right here, what's going on. You get to see how much you're risking. You can see where everything is at right now. If this thing keeps dropping down, and it's going to go ahead and give me my money here. If it decides to go back up, it's probably going to hit this. I'm going to lose $1. But if it goes back here, it's going to put me in, and I'm going to have the ability to make money on this original trade that I set. So that's just a quick example for you guys. I know for a fact that it's not going to make all of the sense in the world, but that's not the purpose of it. I just wanted to kind of give you guys a brief example of how this works. You can even see the trade down here below. We're in profit 2 cent, 5 cent. It's going to be moving, right? You don't want to just sit here and watch it. Let the market move, come back to it. And you could close this trade out at whatever profit that you actually want to. It's all up to you. So let's just say I want to move this thing into profit. I can move it into profit to where now I don't lose anything less than 11 cent or whatever the case may be once the time comes. But I'm not going to do it. I'm just going to leave it alone. If you guys want to see how this trade played out, my free Telegram community is in the description box below. Go to the description box below, read everything, check it all out. Take advantage of whatever I'm giving you guys availability to. I do have a free trading ebook that you also can get joining my my free Telegram community. And if you guys want to know more about trading, you guys got questions, feel free to comment those questions below, and I can help you guys with whatever it is that you need. But let me also show you guys something very quick. Now, if you are somebody who is a beginner at trading and you don't really know much, this is a tool that a lot of people within my community actually takes advantage of. And that is simply because with this tool, it actually does a lot of the hard work for you. I'm going to show you guys a couple of examples. Let's go to some older trades. So right here, okay, what this tool does is it's actually algorithmic technology called the harmonic scanner, and it actually scans the market for you based off of what the market has already done, and it gives you the opportunity to actually know where to get in, where to set your targets, and where to set your stop loss. Now, this is a tool that my community uses. They plug in the numbers and you can make money just plugging in the numbers, but I also teach them a strategy to make sure that you're getting in at the right time. The green line is where they actually recommend you get in after the D. So if you entered this trade right here, this is your first target to make money. This is your second target to make money, and here's your third target. You easily could have made money literally 2 days ago when this trade was called out. Right, February 3rd, right? Today is the 4th. In a few hours it'll be the 5th. So literally, if you would have took this trade February 3rd, you could have already made money. And let's just calculate this to see, for example. So if you would have put $1 into this trade and you took it 3 times, you would have risked $30 on trade number 1, and you would have made 47 because you didn't lose. Trade number 2, you would have risked $30 and you would have made 82. And then trade number 3, you would have risked $30 and you would have made 141. So 32 plus 82 plus 141, that would have been $255 that you would have made from risking 90. Or you could have went less and only risked 50 cents, right? 50 cents, right? $30, that's 15. You would have risked $15 3 times. That would have been $45 to be able to make 47 divided by 2, 23. Target number 2 would have paid you out 42, something like that. And then target 3 would have paid you out like 70 something dollars. So you would have risked a total of 15 times 3, 45. You would have risked 45 to be able to make 72. And let's just say 42. And then let's just say right here 22. You would have risked $45 to make $139. So trading is about risking money. You can't make money without risking money, but you want to be smart about your risk to make sure that when you do make money, that you make enough. Because even if you took this trade 3 times and you lost it, right? Or let's just say 2 times. 45 times 2 is $90. If you lost this trade 2 times and only won it 1 time, you could have made the 130 back. So you would have made your $90 back and you would have still had profit. So it's not about being perfect. All right, it's not about being perfect. It's about being consistent and having a good strategy that gives you a good percentage for your risk to reward. So if you guys want to learn how to use this strategy and you want me to do a video on it, comment harmonics below and I'll teach you guys my 7-step strategy that I teach to my community that literally allows brand new traders to be able to take their own trades within their first and second week trading. So if you guys enjoyed this video, hit that like button, share this video with anybody that you feel like might need it, and make sure you subscribe, turn on that post notifications, and I cannot wait to see you guys in the next video. We are out.
Nowadays all of my enemies wanna be friends.